This is The Roadmap with Lee Heisman.
Hello, everyone, and welcome to The Roadmap, exclusively here at ASBN.com. I'm Lee Heisman, and every week we bring you some of the brightest entrepreneurs, CEOs, and business owners who are climbing the ladder, scaling their businesses, and thinking about how one day to exit stage left. Today, I have a very good friend of mine and what I would call to be a quintessential entrepreneur, Abhi Goel. Abhi, welcome to the show.
Thank you for having me, Lee.
Abhi, on this show, we talk about the roadmap and we speak about the journey from someone starting a business, running down that road and growing it, scaling it, and eventually exiting their business. And a lot of entrepreneurs, when they start their business, they have that goal of exiting, and you've done that 2 times. And we're going to get into not only the fact you've done that twice, you've also bought 3 businesses, and we're going to go into that a little later, but talk about what was the business that you started and give us about your first exit.
Sure. So the business that prompted my first exit was Siracore. It was a managed hosting business. It was actually born out of the idea of another business I had started prior to that called Accelerant. We were doing a lot of software development services, and we found that we were referring a lot of business out for hosting. And naturally, we wanted to sort of hold on to some of the recurring revenue stream. So I launched a managed hosting business and quickly pivoted that from your traditional sort of data center, pizza box sort of a concept to virtualized services, and which became eventually cloud infrastructure. So Siracore was that business that I started.
So a lot of people hear about this cloud and technology, but a key theme for entrepreneurs, what they want to take into account is something you said, and I hear this as a theme on the show, recurring revenue. Yeah. So how important was you having recurring revenue for you to go out into the marketplace?
As far as a sale, it was critical, right? Because as a services provider, when I was selling projects, I eat and live and breathe by the next project. If I don't have a project coming up, then I don't eat. And it's very hard to sell that as a business because the buyer is going to say, well, you've done a great job selling. It's probably a lot of personal relationships, but if I come in and take over, how am I going to take over those relationships? Versus recurring revenue stream, they've got a contract. It's 3-year, 5-year contract, so it has some enterprise value in terms of.
So explain this to me. You have this very successful business, Siracore.
Yeah.
And you're making money in a good way. What prompts you to say, I think it's time to sell? Was it something you didn't like? Was the company flat? Was it not going anywhere, or was it growing?
Sure, the company was growing. There was a couple of sort of perspectives there as far as why it was the right time to sell. We ended up buying out originally it was 3 partners. We had a point of contention with an original partner. We bought him out. The 2 of us continued the business, and we actually started to grow it very quickly. And it was sort of a timing thing where essentially sort of we saw the writing on the wall with cloud infrastructure. It was like, okay, do we go make that big leap to be able to compete with some of the very large guys out there, or do we kind of take our chips off the table and sort of, be on our way sort of thing, so to say. But it was cloud infrastructure, saw the writing on the wall. Amazon was only getting bigger. Azure was only getting bigger. Google with cloud GCP was getting bigger. It was kind of like, do we want to compete with these guys as they begin to sort of offer more services that are very competitive to us and where we were differentiating, or do we take sort of, like I said, our chips off the table?
So timing.
So
some key ingredients you speak of is the timing has to be right.
Yep.
You have to be in a growth mode as well,
yep,
so you can maximize your enterprise value.
Correct.
So for entrepreneurs out there viewing this and saying, okay, once I sell, what happens next? So did you leave the next day and never come back to work when you sold, or did you stay at the company?
Sure. So I think you have options, and it really depends, right? So in our case, it was me and a partner. My partner wanted to stick around. He wasn't ready to necessarily call it quits. I was like, okay, I'm ready. Once I close this chapter, I'd like to be out as quickly as possible. So we proposed to the buyer that he was going to stick around and I would exit, right? So I got out pretty quickly from within about a month after the sale, I was out. That's kind of what I wanted, and he kind of chose to do what he wanted. I think in cases where you're a solo entrepreneur, a buyer needs some level of assurance that you're going to stick around, sort of thing. And we were able to structure it so he was able to provide that assurance.
So jump into this transition, because I'm finding a trend from all of our guests that have sold businesses. Not only do they sell, they tend to buy
Yeah.
as well. It isn't just let me grow another one and sell it.
Yeah.
And I heard you say earlier when we were talking that, well, the first experience was really fun, so you wanted to do it again. Can you elaborate on that?
Sure. So I would say the transaction was stressful, but after the conclusion, and I can reflect back on it, it was enjoyable. It was the right amount of adrenaline, and sort of just the uncertainty of, is the deal going to happen? Maybe I'm an adrenaline junkie from that perspective to an extent, right? But it was, once I exited, I was like, oh, I want to go through that process again. But what I didn't want to go through again necessarily was starting from scratch and the incubation period of that business. It was great. I would never change it for the world, but it was like, how can I shortcut some of this process to where I'm not starting from scratch, building it from scratch, and then looking to get to an exit. So how can I sort of find the folks that have gone through and gotten to, the business to a certain stage, and how can I sort of provide and inject sort of my own approach and strategy and get them to a higher valuation.
So what would you find to be the main difference of growing and selling the business or buying a business? Is it easier or harder to do one or the other?
I would say that it's probably, not probably, I would say from my perspective, it's easier to buy a business than it is to sell a business.
Sure, fair. Yeah. But you also have to have a lot of money behind you.
Sure.
Or a certain amount of money or capital or a loan.
Well, there's creative ways to structure it,
So talk about the second business that you started, grown, or maybe that was a purchase. How did you do a second exit? Was that an organic growth, or did you buy that from scratch?
So I bought that business. It was a business that had been sort of existing. It was a solo entrepreneur. He was tired of what he was doing. He had kind of hit his sort of ceiling with what he could do. I looked at his operations and I saw, well, there's opportunities for growth that you either won't do or don't have the sort of capacity to sort of implement. So I came in and I purchased the business, let him keep sort of a job, and grew it from there. And once again, the writing was on the wall.
What was the writing on the wall? What kind of business was that, and what was the writing on that wall?
So it was a voice over IP services business, and the writing on the wall there was, so I went into it thinking it was a commoditized business, very, everyone needs phone service. All businesses need phone service. And it was a case of, what I learned in that process was a commoditized business is, everyone needs the service. There's a lot of service providers, but it gets very expensive to sort of differentiate yourself and market your services. So I grew that to a pretty decent scale, but I quickly realized I was going to need a sufficiently larger amount of capital. So I would either need to bring in external capital, raise money, or quite honestly look at exiting and taking my chips off the table once again. From that
so it's funny, you have this timing thing. So your sales are all about the timing. It's
correct.
The cloud is getting big.
Yeah.
And before all the big players got even bigger, because today we see the cloud is very obvious, but you're talking about that sale happened what year, your first one?
2017.
2017.
Yeah.
So goodness, is that 6 years ago?
It's been, 5 years ago.
A little over 5 years ago. So you do it right before everything starts to change. And the same with the phone system. Most people don't even have phone systems anymore. Everybody uses their cell phone.
Yeah.
So everything you do has been timing.
Correct.
How much of the market are you actually checking other than your current business that you're running or that you own, where you look at those external factors?
Well, so I just look at the bigger players in the space and see what they're doing. And really it's a case of identifying who's out there and bullish in the space, and have I purchased in advance of that. So it's really a timing. Even on the buy, am I getting in early? Am I exiting at the peak? Or am I at that point going to double down and try to scale it even more? I enjoy the deal. I enjoy the diversity. I enjoy sort of the entrepreneurial aspect of it. So the buying and selling, and it's really about sort of what I enjoy doing, sort of thing. And for me, it's to scale beyond a certain point up until this date has not made a lot of sense.
Well, you are an adrenaline junkie because you just got back from hiking Patagonia. Is that correct?
That's right.
That makes complete sense. I think you are. If it's not one thing, it's going to be another.
Sure.
So through all of these transactions, what has been the next chapter after you sold that second business? Where did you put your effort into? Because I know you do a lot of other things such as investments where you may not own the whole business, or consulting. What is the next chapter when someone attains this level of success?
Sure. So one of the things that I do is I spend my time sort of advising startups, investing in technology startups, primarily in this SaaS space, marketplace space to an extent, and just really helping from a growth strategy perspective, identifying capital sources perspective, and just generally providing advisory services. I also involved in the real estate space. So I've been in real estate since about 2005, and just really over time growing my portfolio as I accumulate capital through buying and selling businesses. So the goal has always been build the real estate portfolio.
Yeah, I've heard consistently, and if anybody's out there watching, reading articles, watching all of the social media, everybody keeps leaning back to real estate, right? How that is a very stable investment. Of course, there's only so much space in this planet, let alone earth on the ground, or hard earth, not water, of course. How much have you learned about that from the first investment you made in real estate till now? Is that really one of the safest trends to invest your money and put your time?
Well, it's been very safe for me, I guess you could say. And I've been fortunate being here in Atlanta. I kind of laugh about this with my friends in a sense that, I haven't necessarily been very smart. I've been very lucky. Like, investing in real estate in Atlanta over the last 20 years, certainly you can make mistakes. So I don't want to say you can't make a mistake.
And let me interrupt you. Have you made any mistakes in it?
I look at some of the worst investments I've done. They've netted me a positive result, right? So in real estate, I've not made any quote unquote mistakes. Could I have done better deals? Yes. Should I have done certain deals that I passed on? Yes. But I can't look back and regret any of the deals that I did.
Sure. No, I love that. Well, hindsight's 20/20.
Sure.
How about in the business space? Because Abhi, man, since I've known you, you just have it together.
Yeah.
I believe you when you said, "No, I really haven't made any mistakes. Even my bad investments are making me money." And my gosh, we wish we all could do that.
Sure.
How about in your business dealings? Have you made any catastrophic mistakes that you've learned from?
I feel like I make a mistake every day. Right. So the nature of business, I feel like in entrepreneurship, is to be able to make those mistakes, quickly learn from those mistakes, and pivot or change or shift.
Can you give us one? Can you give us one?
The voice over IP business was a great one, right? I purchased it, and my expectation was it was going to be a much larger player in the space, in the voice over IP space. I purchased it. I put in the systems and the processes I needed to put in to make the business more efficient and to be able to grow and scale. We started to sell, and we were doing a good job selling, but we weren't doing a great job selling. And I quickly said, okay, well, this is beyond my capacity or what my financial sort of interest is in terms of capitalizing this business. So let's just exit, right? So in that case, when I look at it from a dollars and cents perspective, I made a great return. Did I hit the returns I wanted to hit? No. The failure there was that I underestimated what it was going to take to be successful, but I went in with a strategy that allowed me to exit from a financial perspective in a good place.
So it really sounds like, and for our viewers out there, you can take risk as an entrepreneur, but you can mitigate your risk.
Correct.
And you can actually strategize that even if I don't do as well as I want to do, I'm not going to lose money. I'm still going to make a small profit, not as large as you'd like.
Yeah.
So Abhi, as we have to wrap up today, I've got to ask, what are your future plans? It seems like the world is your oyster.
Yeah, right now we're working on a couple of projects in real estate that I'm really excited about. We're working on a private club up in Roswell, and I continue to sort of be very bullish on real estate. I enjoy what we do in that side of the business. So that's kind of where I'm headed. And outside of that, spend time with my family and go on crazy trips like hiking Patagonia.
Very, very fair. Well, listen, thank you for coming on. And I want to share, because you're such a resource of knowledge. And in addition to your resource of knowledge, I enjoy my time with you because you have such a great disposition. So if people wanted to reach out to you, what's the best way? Is it LinkedIn? Is it an email? How would people reach out to you, maybe to even do an investment with you, do some business with you, or just learn from you?
Sure. Yeah, the best place to reach me is on LinkedIn. So just look up Abhi Goel in Atlanta on LinkedIn. You'll find me. There I am.
Well, there's the face on camera, ladies and gentlemen. There's the face on camera. Look up Abhi. I recommend it. I get around this guy. I was kind of happy today, Abhi, as I normally am, but the moment I saw you in the green room before this, I got very, very happy. So Abhi, thank you so much for coming on the show. Ladies and gentlemen, thank you so much for joining us today. I hope the show was insightful for you. I know it always is for me. We hope to see you again next week for another episode of The Roadmap.
Thanks for watching The Roadmap with Lee Heisman. This has been a JBF Business Media production.